Welcome to The Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to The Weekly Option. This is episode 275 on June the 16th, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Microvision Inc, SoFi Technologies, and Carnival Cruise Lines, and we discuss three new trades on Opendoor Technologies, Norwegian Cruise Line Holdings, and Enovix Corp. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show, or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for The Weekly Option. And for anyone that wants to learn how to trade options, I teach students how to trade options, not just study theory, with the combination of videos and live coaching calls. So if you're ready to take your trading to the next level, send me an email to schedule a phone call. Now, the U.S. equity markets finished higher for the third consecutive week. The Dow Jones Industrial Average grew 422 points, closing at 34,299 points. The S&P 500 index gained 110 points, ending the week at 4,409 points. And now it's time for the topic of the week. The topic of the week is getting some help. Now, this is the weekend that we celebrate Father's Day in the United States. I'm old enough to realize that not everyone has a great relationship with their dad. However, I'm one of the lucky ones. He gave me a lot of wisdom to help me along the way. Now, he's a software engineer, so he couldn't give me direct finance and trading advice. Still, he helped me avoid a few potholes in life. I found the perfect Father's Day card for him a little while ago. After digging through cards with pictures of grills for barbecuing, or fishing rods, or golf clubs, none of which describe my father, I found the perfect card for this year. And hopefully he will not be listening to this show, because it'll spoil there's definitely a spoiler alert. But the card shows an image of the stars with the Little Dipper and Big Dipper. That's it. That's the one. Now, I don't exactly qualify as a chip off the old block, but his way of looking at the world shaped the way I see the world. And when it comes to trading, I have had mentors. My way of analyzing risk and my style of trading, though different than my mentors, was heavily influenced by the guys I learned from. They also kept me from making huge mistakes that I personally couldn't see on my own. We used to always say that everybody learns and lessons aren't free. In fact, I've mentioned that on this show before. The best lessons are the ones that I don't have to pay for personally. My mentors, the guys who taught me to trade, they paid some of those lessons for me. That's the main reason why I offer coaching now. It's one of the ways that I get to give back to the industry that has given me so much. Now, it's not totally one-sided either. It's awesome when one of your students takes your method, infuses it with their own personality, and then trades in a style that you never would have thought about or never would have considered. That makes me feel like a proud papa. So happy Father's Day to all the fathers out there. We all need mentors. And hey, if you need one for option trading, shoot me an email. Now, let's go ahead and get into the trading review for last week's trades. We'll start off with the covered call on Microvision Inc, symbol M as in Mike, V as in Victor, I as in India, S as in Sierra. At the time, stock was trading for $6.70 per share. We looked at buying stock and selling the July 7 call at 98 cents, which could give us a return of 19.10% in 6 weeks. Now, shares of Microvision fell $2.20, ending the week at $4.50 per share. The call option we sold lost 68 cents, leaving us with a net loss of $1.52 if we were to close the trade out immediately. Now, that's a pretty hefty loss on the week, so of course we wouldn't close this trade just yet. My first plan is to roll the strike lower. However, I want to make sure that I choose a strike that will pay me enough in terms of option premium collected and the stock appreciation to actually recoup the $1.52 loss so far. So even though the stock might not rise immediately to offset the loss this month, remember that we can hold on to the stock and continue selling out of the money options until the stock rises and we get taken out for profit in a future month. So I'd consider rolling the option down to the July 6th call, which can be sold at 36 cents. That would leave us with a $1.50 move in the stock plus 36 cents that we collect in selling the call option if stock were to rally up to $6. It also leaves us with some room to benefit from a stock price rise if that starts to happen again. So that's the main thing. We want to have room to capture some of the increase in the stock price, plus be able to keep our option premium. Now, as usual, just make sure you do the math on any adjustments that you make and make sure that you understand the risk that you'll be taking on with the trade once you make any adjustments. Next up, we had our credit spread. We looked at SoFi Technologies, symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. At the time, the stock was trading for $8.18 per share. I looked at selling the July 8-7 put spread at 34 cents, which could give us a maximum possible loss of 66 cents per spread. Well, shares of SoFi grew 42 cents, closing at $8.60 per share. The out-of-the-money put spread we sold is now even more out of the money, and if stock remains above $8 in the coming weeks, the spread is going to lose more value and eventually expire worthless. That's our hope for this trade. So stock is moving in the right direction overall so far, so no adjustments are needed on this one either. Finally, we had our debit spread on Carnival Cruise Lines, symbol C as in Charlie, C as in Charlie, L as in Lima. At the time, the stock was trading for $13.10 per share. I looked at buying the July 12.5-13 call spread for 33 cents, which could give us a maximum gain of 17 cents, or that's a 51.52% return in 6 weeks. Well, shares of Carnival Cruise Line rose $2.69 per share, ending the week at $15.79 per share. The in-the-money call spread that we bought is now even more in the money, increasing the likelihood of us earning our full expected profit of 51% return in 4 weeks. So no adjustments are needed for this trade thus far. You can widen the spread to try to capture a larger profit if you are so inclined. We've discussed this at length in previous episodes. Now, if you need some help understanding, seriously, just send me an email. So that's it for the trade review from last week's trades. Of course, today was options expiration for all monthly options in the month of June. So anything that was in the money will be exchanged for stock. You're gonna see it valued at its intrinsic value, and anything that was out of the money will go ahead and expire at zero. So hopefully all your spreads that you sold expired worthless, and anything that you bought expired in the money deeply, so that you can be taken out of the stock and just count your money without any open risk on Monday morning. So that's it. All of the new trades for this upcoming week are going to use the July 21st expiration date for monthly options in July. So let's start off with the covered call. This week I'm looking at Opendoor Technologies Inc, symbol O as in Oscar, P as in Papa, E as in Echo, N as in November. The stock ended the week at $3.01 per share. I'm looking at buying stock and selling that July 3/2 call at 25 cents, which could give us a return of 24.58% in 5 weeks. Now you enter this trade by buying stock for $3.01 per share and selling the July 3/2 call at 25 cents. This trade makes the most money if stock prices finish above $3.50 per share. The break-even price on this trade is $2.76, and in real terms, the stock purchase will require $301, and you'll collect $25 for selling the option. I also looked at another trade on this very name, OPEN, Opendoor Technologies, and that's by buying stock and selling the July 3 call. Right now, you can actually sell that July 3 call at 40 cents. So right off the bat, you'd be locking in. I mean, there's still time, so I shouldn't say exactly locking in, but there's a high likelihood of walking away with a 12% return on buying stock that's 1 cent higher than the strike and then selling collecting that option premium. So consider that a freebie. All right, next up, we've got a credit spread on Norwegian Cruise Line Holdings, symbol N as in November, C as in Charlie, L as in Lima, H as in Hotel. The stock ended the week at $19.12 per share. I looked at selling the July 19-18 put spread at 38 cents, which could give us a maximum possible loss of 62 cents per spread. Now you enter this trade by selling the July 19 put at 93 cents and concurrently buying the July 18 put for 55 cents. This is the credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $19 per spread. The break-even price on this trade is $18.62 per share, and in real terms, you would receive $38 per spread that you sell and have $62 at risk. And our final trade on the week is going to be a debit spread. Looking at Enovix or Enovix Corporation Inc., symbol E as in Echo, N as in November, V as in Victor, X as in X-ray. The stock ended the week at $15.12 per share. I'm looking at buying the July 14-15 call spread for 60 cents, which could give us a maximum gain of 40 cents, or that would be a 66.67% return in 5 weeks. Now you enter this trade by buying the July 14 call for $2.15 and concurrently selling the July 15 call at $1.55. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $15 per share. The break-even price on this trade is $14.60 per share, and in real terms, you'll pay $60 to enter the spread, and your maximum gain is $40 per spread. So that's it for this week's show. Thank you guys so much for following along with me. Thank you for the emails that I get. Thank you for sharing the show with a friend. It's so much fun to see new listeners. I've also been sharing it on YouTube as well, so people have been listening over there. I've got some more content that's coming. I'm actually building out a community for you guys as well, so you'll hear more in the coming weeks about that. It's just going to be a lot of fun. Just trying to grow up a little bit, get better, and serve more people. So thank you guys for being with me on this journey. If there's anything you'd like to see on the show, as always, you're welcome to email me. I do reply to my emails as well, so feel free to shoot me an email and expect to hear back from me. It's typically not an assistant. It's normally me. So thanks for listening. I've said that like 5 times. Have a happy Father's Day, a great weekend, and as always, happy trading.
Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.